All right. Good afternoon, everyone. Welcome to our PUG meeting. What a hell of a day. I'm sorry I'm a minute tardy on today's presentation, but quite frankly, we had a couple of things going on here. Netflix earnings after the bell. It was directly after the bell, quite frankly. Heck of a volatile day today. Big pump to the upside of 1% gain in the overall indices. Ended up with a whale of almost a flip of about a 1.5% decline. So we're talking today, 2.75% swing in valuations. Pretty crazy. The topic du jour was to ask about a follow through, whereas we did a algo class workshop last week. And during these workshops, generally speaking, we started a workshop how many years ago? Year and a half ago? January of 22 years ago. We did our first laser focus class where we built strategies, thinking that we would set our year up, I think, with the Russell, the S&P, the VXX, and Bitcoin GBTC model, and we updated that, and we went through that presentation. Then finally, following through, we did another one. It was pretty popular. We did a summer school version, and interestingly enough, we added one, which I thought, hey, we're fully entrenched in a pandemic. Maybe biotech will be good. So I had the idea to think, well, maybe we could auto strategize a position in XBI, the exchange traded fund in ETF on biotech. And kind of funny, all last year, only about 5 stocks in the world really did much. It was Pfizer, Lilly, a little bit Johnson & Johnson really didn't do much. And again, the big killer was Moderna. Other than that, most of the biotech didn't move much. The worst model, which wasn't that bad, I think it was flat on the year actually, looking in hindsight, was in fact the XBI. So what's the point I'm making? A lot of the strategies that we've built and we've put together are still working. Today, we had some questions in our PUG meeting. So the questions are answered in relevance to Person's User Group. I like to remind everyone, what is Person's User Group? And it looks like Jerome's saying there's no sound. I am clearly talking. So is there no sound? Anyone else have an issue? Because I am talking. Jerome, no sound. Anyone else have sound? Pretty strange. And we are recording. Sound okay for Ben. Thank you, Ben. There is sound. There is sound. Try to re-log in. Question mark. Enter. Brandon, thank you very much for the thumbs up. Very nice. All right. So with that said, let's kind of get started because, what we base our product program off of is on Person's User Group, our indicators, Person's User Group, my indicators, how we use them. We have several different platforms that can be applied with, whether it's Thinkorswim, of course, Genesis Trade Navigator, and we also have TradeStation and HGSI. So there's 4 platforms that use some or most of our programs. For this presentation today, if you're interested, we're going to kind of follow up with a little bit of algo because it seemed that we had a lot of questions on the algo strategy workshop, and then there were some people that have recently joined and have acquired the algo strategies and had some open questions, which I think were pretty important. So therefore, today's focus is going to be on the algo strategies, and I'm going to use, for an example, and not the model. I guess I could photocopy, copy, paste. We're projecting in the live trading room the model that we've got going on here in the other trading room. So bottom line, there is sound. Try to re-log in. So hopefully, Jerome, you can get back in. We will. And again, I like to also make sure that if there are those that aren't, there's a lot of people that can't attend, time constraints, other obligations, we get that. And the neat thing is that these are recorded. It's always nice to have a few, some live attendees that if there's a question we can get engaged with. But basically what I'm going to go over today is some of the questions that we had, which were relevant and are also, I think, fairly important in this environment. So with that said, we'll get started. Please take a second to read the disclosure. Trading involves risk of loss. And let's go with the model that I've chosen right here. Here we go. All right, next. Let me hit, I'm going to close this out. I'm going to do something. And it was a good question that we had. And I'm going to throw Ben under the water. Ben, I don't know if you're with us, but I'm going to throw you out under the water because you really did a great job taking a lot of time to ask some questions in the algo workshop last week. And I think that your questions, not that I'm being funny, not that I can throw you under the water, but give you a little bit of credit because you did ask some good questions. And I think that your question might be relevant for others that might have a similar question. So one question that Ben was asking is it okay to just copy paste algo windows? And that's an easy question. That's a softball question. So basically, I'm going to copy a window from the algo room in the live trade room, and I'm going to paste it right here. Now, if I have, and this is the model that we use in the live trade room. This runs 24 hours a day, 5 days a week generally. So right now it is currently running live. It is flat. It went short. It was long, short, long, short. This is a 5-minute day trade model in this environment. So there are different models that we could use. And in fact, just to take a look, I mean, you could see if it's a red, like a long entry here and it connect the dot, that's a losing trade. I think everyone's pretty well versed in understanding if it's red if long bad, red if short bad. But if it's a green, connect the dot line, that's what TradeStation allows us to see the trade several different ways. Live P&L on a performance graph, as well as on the chart itself, okay? Oh, Jesus, gee whiz, Jerome, sorry about that. So in any event, it does pick up. Now, what we have down here are the John Person. That's the John Person volume indicator. And one of the things that I like to say is the market's generating a short when the volume trend is moving lower. It's telling you that there's probably a good idea that if you generate a short and the volume is deteriorating in a negative form, it's kind of suggesting that if you can see that the market's rising and the volume is declining, that tells you that it's a week long. It's the market's running out of steam. Then again, with today's action, we did have the same thing on a 5-minute model. Same thing happened. And again, this is the live trade room model that's running. So, I mean, it had a long, the market went up in the first hour. It looked as if a lot of things were going right. The volatility index, the VXX, was going down, which helped support that possibly we had a maybe near-term low. And something happened around 1:30. And the only thing that I could suggest at around 1:30 is the Federal Reserve came out and announced that they had a cryptocurrency paper that was released. And I think it kind of may also been the impetus to yank the plug. Also, I want to point out that between 1 o'clock and Eastern Standard Time, you also get maybe some interest in the form of margin call liquidation that occurs in New York. So generally speaking, we like to wait to make that 1:30 time period, which on a 4-hour chart is like half the day, really, right? So that 1:30 turn, 9:30 to 1:30 is 4 hours on an open hour chart. And it's kind of like everyone's back from work from lunch in like the old days where, well, now computers don't need lunch, but people still eat lunch, right? And humans still have to run the machines and humans still make buy and sell decisions. In the last prior 4 years, we had an administration that did a lot of meetings at lunch hour, like 12:30, 1 o'clock, 1:30. You know, there was a lot of them. Remember the China talks, discussions. There were a lot of things that occurred at 1 o'clock and markets went haywire. The only explanation I have that I was asked earlier, what caused today's market rout, was more likely selling pressure built in. Maybe there was some margin calls with some hedge funds. I don't have the answer to that. Maybe precipitated by people were just looking to dump on the rally. But I will say that at around 1:30, dynamics of the market started to change. And so this kind of like started to really feed upon itself. So when you look at an algo strategy, a couple things, and we can build different models for different ideas. This model, and I just wanted to answer the question, if you're going to start to build a model, the first thing that you ever want to do using the Algo Optimizer program, and for this class, we are using 10.0, and I know that there's more videos that we can modernize and update. There's only a few changes that we had from the very first algo class set or algo model that came out to this one. And what we did is there's a lot of great new changes. And one of the changes is, we'll get to those in just a minute, but I wanted to answer the question is, if you're building a platform and with TradeStation, you're allowed to open up several different desktops. Can I simply, if you wanted to use the same model on a different desktop, like say, for example, I want a 5-minute model on an S&P, or say I want to go and put that model right here on this page. And while I'm looking at my stock position on my radar, I want this running. The answer is yes, you can do that. No problem. It's all day long. What you don't want to do is run on a computer the same system if you're live trading on multiple desktops. That's going to cause a conflict. So the answer there is no. Okay. That's number one. Number two, a fund liquidated. I think a lot of funds were liquidated, by the way, Johnny. Johnny B. Good. Excellent. All right. So the question at hand is, how can you use, it's more like a TradeStation, and it is a little intense. You got to know TradeStation a little bit. So it takes a learning curve to know TradeStation. It's not hard. It's easy. It takes a little commitment, like knowing any platform or knowing your settings on your iPhone app, or downloading music, with your iTunes app store. There's some functions you got to go through. There is a small, slight learning curve. That's the fact. But with anything in this day and age, there's always a learning curve. Think through the question, or before you act. If someone says, John, if I copy this window, is it possible? Well, what is your motive to copy the window? I want to see this trade signals. If you're looking at a signal and it says you want to trade this live, if you're trading it live, you probably don't want to open up the same window a bunch of times because you're consuming resources. So think about what takes place in the background to generate trades. You can have this open if you are watching it and you're entering orders on one or two platforms, fine. As it is right now, I've got two desktops open on one computer. I've got the algo strategy working in one window. I have it working on another workspace right here. And now I added it to a different workspace. Now, raise your hand if you think that eventually I've opened up with all of those programs running right now and that algo working behind the scene, and it's the same algo working 3 times. Think of it this way. Do you think you've left the door open for a market crash? Do you think, or not a market crash, a computer crash? Do you think you've opened the door and set yourself up for a Murphy's Law? TradeStation experienced the problem and needs to shut down because you got 3 optimized algo programs running, the same one actually, on 3 different desktops, or possibly 3 different windows. And the answer is you probably set yourself up for a crash. So be very careful what you do when you open and why you need that. Now, if you have 2 desktops and you got it running on one and you want to see the other and your eyes are fishing around, different story. If you're using it, and I think a lot of people, another element that I want to make mention, if you're using and you make a copy of a window. So in this case, a copy of the window from one desktop to another, and you say, I'm going to re-optimize my program. Then one thing you want to do is do this. Go to File, go to Workspace, go to a new workspace, and a new window opens up. And then paste window. So I've got my original one there, and I'm going to mess with, or not mess, poor choice of words. I'm going to modify. I'm going to optimize, because at this point in time, I don't want to ruin the settings in the current model I have, which is my original one running on a different space. But you know what? I think I can modify, or I want to take time, since now we have something that's occurred that we haven't seen in a while, an uptick in volatility. We've seen the ATR increase in the market. How do we know that? Well, here's a trick. Whether it's my workspace, since we're on TradeStation, real simple, you can simply go to your PUG radar. I can go, and I'm going to delete this now because I don't want that workspace here. And I want to look at perhaps an ATR of the S&P 500. So I can go to a daily chart. Let's go to studies. We're going to add a study. And I'm going to go up alphabetically here and go to ATR, average true range. And so this is going to be, I think, quite helpful for a lot of people. We covered this in, and by the way, this is good follow-up work on what we covered in our workshop and how it applies with our PUG users group. And in fact, it's something that everyone in this community, whether you're using Thinkorswim, Genesis, you can all benefit. I'm just going to work with TradeStation today, not to confuse everything and just to stick with one platform. But if you're looking to build a strategy, or I think, hey, maybe I need to optimize a strategy, when would you want to optimize a strategy? You'd want to do it when dynamics of the market changes. So what's one of the dynamic functions of what changes in the market? Trading range. And what is the best tool to identify trading range changes? Average true range. So I've just put up the average true range, and most platforms, whether it's Genesis, whether even Thinkorswim, it's funny because they all start off, if you've ever noticed, and if you do this, they all have the default of 14 period, because that was the guy who created this, Wells Wilder's, that was his concept. 14 was half a cycle, and he called it trading cycle. And a trading cycle at the time, he was considering a month, 28 days on average in a month. So 14 was half. I don't use a 14 period, and I haven't for, I don't know, 30 years. One of the main reasons is because we have overnight trading. And since maybe a lot of my trades aren't futures, and if my trades are futures, remember when Wells Wilder created this, he was trading back in the 70s when we did not have overnight trading, 24-hour trading access. So first and foremost, you got to say, well, there were limit moves, overnight moves in the grains, or what he was trading were more likely in the grains, because the S&Ps weren't around when he created this indicator. What this indicator does is it just averages out the range over time. Now, this is a daily chart of Expedia, so we're not even looking at the right trade. So let's take a look at @ES just to get a continuation pattern. So if I'm looking at building a strategy and I want to start somewhere first, the question and topic was, can I copy a window from another workspace? Answer, yes. But make sure you have a good reason for doing it. And another hint, and I said this before, I want to reiterate, I said it in the workshop last week. Make sure you want to optimize something. You don't do it during trading hours. Number one, why? You set yourself up for failure. Do you want TradeStation to crash in the middle of the day? So the more workspaces and the more programs you're running, the more resources you're consuming. And when the market's moving aggressively, like everything's crashing or moving around like on a day like today, trust me, if you have a lot of things working in the background, the radar screen going up, there's a lot of things analyzing behind the scenes, and you're going to, your computer, TradeStation might not be able to work as efficiently. And the more things you open up, the more problems you're going to have. So when the question is begged, is it okay to copy and paste algo windows? make sure that you're not running too many other programs, and make sure the reason why you're doing that is maybe to build another desktop, and you shouldn't have the same program working on multiple workspaces. So unless there's a darn good reason, you don't need to have 5 workspaces open. Like down below, I have now Untitled Workspace, I have the radar, I have a scanner, I have my AD line, and my physical AES model. If I have all of those working and they're up during the day when the market's moving fast and furious, I'm setting myself up for failure. So you want to have what's up, what's relevant to your trading and your focus of your current trade. If you want to copy and paste a workspace because you want to modify something or do a little optimization maintenance, different story. And if you're doing that, then make sure you do it in the off hours. Hopefully that's not a bad idea. So if you are going to copy a window and for reasons of I want to optimize a workspace, and this is a great way of doing it. Copy your window so that way you're not over optimizing or modifying your current program. Your current program's on a different workspace, and we've got, maybe retitle this as just save workspace as ES optimize. And then, I don't know, 120, 20, 22. So if I ever go back and I look at all of my workspaces, I can say, oh, I was messing around that day. That's just an ES optimization program I was running. So I'm not going to do it because I don't want to put that in my folder. So bottom line, if you're looking to do a modification or if you're looking to see if there's now time to do something, bottom line, this is the format in which you can do a copy your window to another workspace. All right. So anyway, Johnny B's asked a question, and I think this is also good. And Ben, I think if you guys can, and this is a good way to interact, I will take the opportunity not to be gray-haired and forgetful, and I'll look up because your questions are on a 6-monitor screen system. You're in the upper right, so or left, excuse me. So I have to remember to look up at your questions. So if you've taken the time to type in the question, and this is a great way of interacting, I'm going to answer your question as we go along. So first, Ben says, also not a good idea unless you have an unlimited high speed. Yes. And well, yeah, but mostly because of TradeStation and the resources of your computer, you're asking TradeStation to do a lot of calculations. And the more calculations you're adding to the problem, Ben. So you're asking this to do more things, the more desktops and the more workspaces you have open. So that's the number one focus. Am I asking this program to work overtime too much? And can I afford a market crash in the middle of trading hours? So if the answers are no, don't be doing this, right? Johnny B says, so do you rename the strategy to be specific to the underlying ticker and the time frame? So if you wanted to rebuild, and this is the question, a good question. I am not looking to copy the window of my day trade model to build a Expedia model and use the parameters of my E-mini 5-minute day trade model and apply that to another market. So I think if you're going to re-optimize one program, as I just did, I said I was going to go ES optimize. So I know it's the ES. So if I go back to the workspace, I know, oh, that was the day I was re-optimizing. Now, let's say, for example, you know what? If I go back here, ES, I could go 5 min, optimize, 1, 20, 22. So I know what the date is. It's the ES. It's a 5-minute. Always use hyphens. Can't use dots. Can't use the // So ES 5-minute optimized on 120. I can save that. Oh, wait a minute. I got to go out to dinner. I've done some work already. I had an obligation. I forgot all about it. I got to leave. What happens while I'm gone? TradeStation does some backup performance, or let's say Microsoft does something behind the scenes, or something happens. The internet goes down and I lose everything. Save the workspace. And I'm going to do it right now. Save. Okay. So we have this this there. So first off, close the workspace. Oh, wait a minute. I didn't want to do that. Oh, son of a gun. File, workspace, open workspace, and it should be right there. Open, all good. So there's a disciplined format of how and what to do that makes the safeguard of the work that you're doing and the integrity of your program that you didn't, let's say, and I'm going to probably, if anyone's in the other room, it should be okay. Here's the trade room model. I like this model. I don't want to fudge this model. I don't want to ruin this model. So therefore, I copied the window and I put it here. Okay, I copied it and put it here. So now let's say I go, all right, wait a minute. We've got a different type of environment right now. What is the environment? Well, let's double check something. We're going to go up to studies. We're going to edit studies, and we're going to say, well, what is the current environment ATR? Well, drop this window here. And if you want exact information, well, as you can see, I should have checked already, but you caught me with my pants down, guys. I was going to change this to a 10 period because that's what I use. And I already have a 10 period on this chart. I just turned it off. But so anyway, I'm just going to remove it and I'm going to turn this on. So at least you know I do what I practice what I preach. So we're going to leave and then we're going to close this up and we should get the average true range. And now I've got a daily chart on the ES with an average true range. We have already been building a higher ATR environment, and we've been doing so since the beginning of the year. The ATR is starting to expand. So the question begs, if you built a model that has been between an ATR range since May of last year with a high of a 10-day ATR of 74 and a low of 33, you're stuck in that ATR range, and that's okay. When do I want to say, hey, something's acting squirrely, or my system isn't doing better than it should, or it's not performing like I expect? It's probably because the ATR has changed. And if we get out of the 10-day ATR and we start to do things like we did in March or late February, early March of 2020, where we hit this insane ATR level, the 10-day ATR was up to approximately, what was it, 249, I think was the actual number, 249 on a 10-day ATR. Listen, no system, if you built a system that's used to a 35 to 40 ATR or 50 ATR environment, no system's going to do phenomenally well. It might capture some trades, but when you expand your ATR by threefold, so an 80 point ATR, 3 times 8 is 240. You have a 300% increase in your 10-day ATR. You know your system's something ain't gonna go right. It's not gonna perform better than the market. It's gonna something because it's not designed to trail stops, and it's not designed to do and behave in the same fashion as an increase in ATR of that historic event, and that was a pandemic event. But I think that if you say, hey, maybe today or this last 10-day ATR we're getting near, and I'll give it another couple days. If that ATR continues to expand, or tomorrow we walk in and we form a 90 handle day, 110 point day, just keep in mind, what is your 10-day ATR right now relative to the current daily range? So generally speaking, we covered this in the workshop last week, right, guys? You know, you use the ATR as a guide in order to figure out where the market might go. What is the condition of the ATR? And usually speaking, when the average true range is starting to go up, it's a sign that prices are going down. Why? Because market behavior, markets go down in the S&Ps and the stock indices. They tend to go down further and faster So they fall off the cliff and they walk up the stairs. So lower, when an ATR environment is starting to decline, that's when you get more normalized ranges. And so if you start to see the ATR decline, you know you're maybe done with a correction phase in the market. That's hint number one. So how is that relevant to building a strategy? So this particular strategy that we have in the live trading room does something unique. It doesn't scale out and it trails a stop. Now, I don't have listed in the live room what every stop out, because all it shows is the entry and the exits. And this was today. The market was sitting there on a short, and then, everything was all right, a normal pullback. It's lunch hour. It's after lunch hour. It's now 1:30. All of a sudden, we got a big pump in the market, and it just dumped. So all it seems they did was go up, stop everybody out of shorts, and then generated a new shell. In fact, this covered a short, went long, got out of the long, and reversed immediately to go short. How can you, as a trader, adjust for that type of volatility or that type of market gyration? It's hard. And I think that in an algo strategy, it doesn't think. If it generates a signal, it generates a signal. The question is, can I make this better? How do I adjust for the current ATR? And if you don't know what ATR is, how are you going to build your strategy or defend against a market that, if the ATR goes from just 80 points or 84 points, what if we get into another range of 250 ATRs? How are you going to have a system to use that? So that's why, if you're looking to build, modify, maintain a strategy, you need to understand ATR. And how do you begin? Well, copy your one window, put it into a new optimization workspace, and then you can work with that and say, do I need to change things? Personally, I'm not going to change a damn thing, because we haven't really expanded, as I just shared with you. Have we broken out of the highest ATR we had, by the way, interestingly enough, was back in December. So over the last year, we haven't broken out of the highest of the ATR. So we're stuck between the range of its normal trading pattern since March of a year ago. So almost a whole year we've gone, and this is our range for ATR. So the system doesn't need to change right now. I'm just offering a theoretical, and I think it's important that what if over the next few days, or maybe this turns into a more pronounced bear market. As it is now, most of my indicators are suggesting that the market's getting close to an oversold reading, and that comes from another page we get here. When I say most of the indicators are already projecting oversold, the Qs, for example, we're at a person's pivot support. We just traded just slightly through it. The advanced decline looks bad, that's for sure. The advanced decline cumulative ratio line on the Qs looks bad. The volume indicator, the person volume indicator, hell, we sold off. I mean, a dramatic sell-off, and the volume trend is it's not telling me to buy it expressly this second, but it's saying that this sell-off something's weird. There's not a huge amount of volume relative to the momentum of past volume sell-offs in this market. So selling the market on the close today doesn't make sense at all. If you take a look to expand this in the Qs, and I'll change this up, look where this is a Mcclellan Oscillator. This is part of the person user group, because these are the tools that we use to help determine building at least ideas and tools that we can use to make better trade decisions. The Mcclellan Oscillator, and I'm not going to get into the details of it, that's not the purpose today. Many of you are already aware of it. It's an advanced decline momentum indicator, and it uses a moving average component. The Mcclellan Oscillator, Sherman McClellan built this with his wife decades ago. And I did have the fortunate to I don't want to say work, but I'll say speak and present at a International Federation IFTA event in none other than Sharm el Sheikh, Egypt. Isn't that something? So anyway, I'm blessed that I've been able to meet really phenomenal people in my life and in really different places. But anyway, with the Mcclellan Oscillator, he took the advanced decline work from the New York Stock Exchange Composite Index. I don't trade the NYSE. In fact, no one trades the NYSE because it's an index. And if you take a look on CNBC, they always talk about, look at the breadth of the market, the advancers versus decliners. And that's important. Sherman McClellan had a little oscillator idea, and I think it's a fabulous concept. But since I'm not trading the NYSE, I'm trading individual sector ETFs like the Qs or the S&P 500. We took his concept and we applied my idea, which is to break down the specific stock components of the advancers versus decliners. And that's where we built our own McClellan Oscillator. So with that said, the concept of going overbought, oversold, zero line, there's different signals, overbought and oversold. So if we focus on oversold right now, the current reading is nearing levels that we've seen market conditions where we've seen markets recover and rally from. So just wanted to point out that we're starting to see, and in this range, I'm not saying we can't get like nasty, which we could turn nasty. There's still a little bit more room to go down. Just saying I'd say the bulk of the moves already occurred. We still see a little bit more downside unless this thing gets more work involved, unless the volume really picks up. To be honest with you, I just don't have the inclination to call out that the market's going to crash and go to zero right now. And if it does, I'm sure we're going to have dead cat bounces along the way, I hope. Now, we're talking about the E-mini S&Ps, and it's the same concept. We took the McClellan Oscillator, and if we expand on this, there's other tools that we have. Stochastics, looking at a daily chart on the SPY, we're not saying the market can't go down, but it's nearing an oversold condition. We're reading right now on an end of day 2.8. That's pretty significant, getting significantly oversold in a slow stochastics reading. So if you go all the way back to when we were in the pandemic, I mean, we're one of the, keep going. So we're like at a very extreme we're more oversold right now in the market than we were back when the market fell out of bed when we had a high ATR. So that might explain, looking at the volume indicator right here, we're sitting here on a sell-off that might be very short-lived. So that's my 2 cents. The McClellan Oscillator, as it relates to the S&P 500, is also nearing oversold. So again, it's about condition. What can we do to be better traders, have better information? What is the condition of the market? What constitutes the value of the S&P 500? 500 stocks. Are they going up or down? And if a lot of stocks have gone down for a prescribed period of time, we get into a historic oversold reading. It means that the market is less likely, like now's not the time to start implementing major sell programs. There's probably a bounce coming in here somewhere. So my guess is maybe someone had to liquidate a holding. Maybe there's some more follow through tomorrow for options expiration. We could open lower, trade higher, but the indicators right now are starting to suggest, by the way, we're oversold. The advanced decline cumulative ratio, and I didn't want to get into a training class, but I figured, you know what, this is an important day, so let's take a look at it and then also tie it in with person user group. The advanced decline, this is our specific page with our program, right? We built this, so everyone, when you get this product with TradeStation, it comes with all of these indicators, and they're there for a reason. The advanced decline, if you notice that the current day's close is lower than when we were, back over here at the beginning of the year, or at least on December 1st, excuse me. So we've made lower closing low, and the advanced decline is still relatively higher. It hasn't led us into new lower lows. And so bottom line is the daily end of day advanced decline on the S&P 500, well, was telling us it wasn't too wholesome to aggressively buying up here. It's now starting to suggest, you know what? this thing has an opportunity to base out over the next day or so. So with that said, back to day trading ES, do I need to remodify my program? If someone says, John, I'm about to remodify it. First off, I already wanted to reemphasize. I said, I am not interested in optimizing my program based on today's action. Number one, why? Because I went to testifiably look at evidence that says, are we out of the norm of trading? We had a big sell-off day today, big sell-off the day before, 3 days of big liquidation sell-off, and the ATR has not expanded to a newer high that's out of its mean or its range for the last year. We're just kind of like in a normal range. And so the other conditional indicators are also suggesting that the market's more likely to be finding a near-term bottom, not the bottom. I'm not saying that, but more likely a near-term bottom. If you add everything up, it doesn't suggest to do anything to remodify your program. So first off, if I wanted to say, should I be modifying something? There's certain checklists of, well, is it working? Okay, yeah. But it got out of the trade a little early. It left a little money on the table. And your point is, it still captured the right trend and it still stayed in the trade for the bulk of the downside. So this particular model, there's no way I would even change this. Okay. So bottom line to Johnny B. Good's Johnny B topic, do I rename the strategy to be specific to the underlying ticker? Well, we did. It's the ES. I know it's a 5-minute model, and I'm optimizing it today. I don't need to do anything about that. You always, I have talked about walk forward process, but I don't, not in the PUG meeting. On an optimization program, sure, but on a PUG meeting, no. And you won't hear me talk about, by the way, a lot on Sharpe ratio, because Sharpe ratio needs an input of interest rates. So ask me in a year if we do see a rise in interest rates, especially on the 3-month bill. If the 3-month bill gets, like, say, over, what is it? I didn't check this week today what the 3-month cash T-bill rate is, but it was like 3-month was like 0.1%, something like that. So if it gets up to something normal like 1%, then we can start looking and fiddling around with the Sharpe ratio too. So this model here, I don't need to change. When would I need to change? I'm not building a strategy. The topic is, when would I modify and do maintenance on a strategy? And a maintenance on a strategy, if I'm going to begin, that's when I would copy a window and paste it and start working, and then say, well, what's the first thing I want to work on? Well, the first thing I want to work on is, we got some wild ranges. And so if you think there's a wild range and you're not quite sure how wild is the range, use your 10-day ATR, and you would probably have discovered, oh yeah, by the way, it ain't that wild. So the ATR does a couple things. It helps us to uncover what our current market condition is. And I think that's an important element. So for the purpose of today's class, I think we had a couple questions that I wanted to review. And then the purpose of when do you want to modify a strategy? Well, first off, you modify a strategy when it's outside of its norm of not working. Okay. Like 15 losers in a row, destroying your performance. It's not working. It went long. It didn't go short today. All right. For example, if the strategy didn't go short today, it has every opportunity to get short. It went long and stayed long. Well, that would be a problem, right? That would be one of the biggest problems that I would work on. So having these run live in front, and then as you guys will all know right now, here's, I'm not sure this is if we're still together, but this just popped up, by the way, data connection, and it should be back, hopefully. Are we still with you guys? Oh, thank you, Brandon. Good, because I was going to say, well, that concludes today's session. So what a great way of saying, gee, maybe John's got too many programs open. This could have happened. Data connection could have been lost. The first thing that you're going to do is one of the reasons that you would copy a window that you have a system that works, that's doing well, is don't mess it up if it ain't broken, A. B, if you are considering, hey, maybe I want to, look at something, you start getting curious because you're bored during the day and the market's moving. You're not you should never consider, unless you're going to not trade, you have no skin in the game, never optimize, never run a performance on a strategy during the trading session. That's number one. That's an easy topic to cover. So if you are thinking of copying a window, one question I've gotten in the past a lot is, hey, I want to build a strategy on the mini Dow. The mini Dow is very similar to the ES. And the answer is, it really isn't, actually. First off, the way it trades, its tick value is different. Its value overall is different. Its trading ranges are different. So it has different components. It might be a very similar performing index, but after last year, everyone should be well aware, the Dow and the S&P were two separate performers. They are two different indexes. So therefore, they have different category of stocks that weigh on their valuation. So you just should not assume. What about Apple, John? I can build a simple with Apple using a 5-minute model settings on the ES. And I'd say, if you are going to experiment with that question, then this is where you would want to do it. Don't do it to your original workspace, because that should be saved. You shouldn't mess with it. Open a separate workspace, and then you can copy paste this into a new workspace. And so if you want to say, well, gee, let me experiment. Does Apple work on this model? Because Apple's fairly correlated to the S&Ps. Quite frankly, you would say, ironically, I would not personally trade a 5-minute day trade model on Apple, copying the settings from the E-mini S&P, okay, without running some kind of optimization. I mean, there's just no chance. It's a coincidence that it's got on a 5-minute model some good triggers and signals. It's ironic that this signal also had covered a position. Why it didn't go long, it just re-entered the short. So, I mean, we could take a quick gander and say, when would you, when would you want to take a look at that? Well, the first thing I'd say, well, look at the performance, and oh yeah, this thing sucks. So bottom line, I mean, you could also look at, yeah, its efficiency is not bad, but it's not great. Its entry efficiency, its exits not in the 40s or 50s or 60s. So that's kind of bad. So something has to be worked on immediately with exits. What about entry efficiency? No, not bad. 55. Half the time it gets into the right trade. Okay. So we know that looking at efficiency ratios, we have to look at getting out of the market's the biggest problem than getting in. It has no problem getting into a trade. It has a problem on its efficiency. So it tells me that this is not a strategy that I want to run without doing some kind of work. And bottom line, maybe there's some good indicator trades in there. And I mean, trades as an indicator. Like, for example, I'm going long. Volume is upticking. For example, I just made a comment that is fairly important. Looking at the volume analysis and looking at the volume trend. So by the time this generated a fresh buy signal and an entry on a long on this bar, volume's improving, but it ain't getting great. Volume didn't get better until about here. So when the volume improves, that shows there's a little bit more momentum behind the trade. When we see that momentum, the volume improve. So if you take a look at it exited the trade. So we got to figure out, why did it exit that trade? This might be the holding period on average for an E-mini S&P, but not for Apple. So again, you've got to know why is this thing getting out of trades? And you should optimize on the exits, your risk rewards, your holding period, and things of that nature. So again, never do you take one strategy on the ES and use the exact same settings and apply it to something else. So as a coincidence in this market here, if you're day trading Apple, this model holds positions overnight. Oops. So therefore, we know that if Apple came out and said, hey, we just reinvented a new driverless car and it's ready to be sold and we're selling them for $12,000, I mean, where would their stock open up tomorrow? I think it would be, you're short and they just said we have reinvented the wheel and we have a cure for cancer. If this is a day trading model, you have no business holding a short position overnight. So the moral of the story is it seems the exit. So a day trade program should be exiting the trade, right? So at the very least, it's that. So bottom line, let's see. Ramon says he's new and the 17 on Algo on TradeStation got the strategy. When you open is showing everything. When I activate it, do not plot the buy and sell order. Okay. You mean the buy and the sell right here on the chart, Ramon? And that's an easy fix. Edit strategy. So go over to edit strategy and you should get the window box up. Okay, go to customize and click on the side box on 10.0, hit entries, and then you can show your entries, your arrows, your line style, your profitability and unprofitability. And you can also click on show signal name on your long entries or your sell short entries. And you can set that up to show your signal name. And when it goes to exits, for example, and you could do the same thing and then overlay on the chart. So that's also one that you can do if you're looking for labeling the trades, number one. The next thing, customize, draw charts, draw lines. It should also show, if you're interested, go to customize, go to inputs. We'll scroll all the way down and you say draw lines, and 0 is false, 1 is true. It's a true false, draw lines, and hit OK. And now hit close. And now it tells me exactly what I did. It went long on a PPS buy. And by the way, here's another thing that you'll notice that's interesting. We took an E-mini S&P trading model that trades 2 contracts on the ES, 2 contracts. And we took that model and applied it to Apple. So this model is trading 2 shares of Apple. So I'm not quite sure when you build a model, how many shares do you want to trade? I have $1,000 of risk. Put me in as many shares as possible per this risk factor. That would be one method, right? Another method is, hey, I got 20 grand and I'm going to put in to trade Apple on a model just for that one stock, 20 grand. Put me in as many trades as possible that 20 grand will allow me to. That's model number one. Or I only want to trade 100 share increments all the time. Then you'd input on position size model number 3, the exact number of shares, regardless of value, and that's what we'll trade. So we built into the strategy, into the Algo Optimizer, 3 different ways to trade, incidentally. So I just wanted to point out also that this model might have good signals, but it's not going to have good performance because it's A, it's holding positions overnight as a day trade model, B, and it's Apple stock, B, it doesn't have any size to it. So anyway, now that you've done this, you can see you've got your risk. Your risk is, your red is where your initial stop is. You can see your blue is the initial profit target. And then all the gray lines is the dynamic stop loss. And the yellow line is the compression. And this trade triggered the compression exit and it got out, and that's where it says compression exit. So that should help you to see your trades and line up everything for you, Ramon. And I'm glad you asked that, and I'm glad we were here to answer that question. So bottom line, it started off, and I think it was a nice little class as a PUG user to say, hey, can I copy paste trading strategies? Yes, but make sure you understand what are you trying to accomplish. You want to modify a model and you don't want to ruin your original settings? Yeah, sure. After the market closes, run some optimizations. Why would you run an optimization? Oh, because it missed 5 points on an S&P trade. It missed 5 extra point profits. I would say if it made you money and you're worried about it left 5 points on the table, I would have your head re-examined. Just throwing that out there. Didn't want to be rude. Don't want to seem rude. I'm just saying, let's not get in a tizzy over that. The fact that the model's working and it's within its parameters, then what you want to say is the market itself within the way it's trading in recent history. And recent history on a 5-minute model probably is the last month. But I went back a whole year and said, what is the range of ATRs of this market environment? And as you notice, even with today's action, we are not outside the 10-day ATR range that we've been in for the last year. So it's kind of like a normal market. We watch every day. If you start to say, hey, the 10-day ATR is 84 points, and tomorrow we go to 99 point range. The next day is 110 point range. We're getting outside that comfort level of our ATR over the last year, which is what your model might have been built on. And then you could start saying, hey, something's acting a little goofy here. The market's starting to accelerate. What would you need to probably change? Your risk model now needs to change. Your holding period might need to change, as well as your profit targets might need to change. So that's kind of like that you want to be take under consideration. All right. The thing is, do not the automatic entry. The thing is, do not the automatic entry. So you're talking about, do you want to auto execute a trade? And if you go up to your study and you edit strategies and you want to automatically, that function is in the main window, and generate strategy orders and automate executing an account and confirm on or off. So if you want that strategy to work automatically and you don't want confirmation, hey, you're going to get an alert box. You just say, hey, I really like when this thing goes short, I want it to go short. Then this is where you find how to automatically generate the trades in your account or automatically execute with or without confirmation. And it's on that. That was your question, and I hope I answered it. All right. Well, I think today's topic for the PUG meeting, it was kind of good to be able to follow up with last week's workshop, number one. And I think that regardless, one of the main functions of any strategy, and I know I talked with another individual just this week, and they said, for their limited experience, they always hear that by the time someone develops a system, they always fail. And I said, well, why? I think a better statement would be maybe someone explain, why do systems fail? Because after someone comes up with the idea of studying a moving average, a profit target, or an entry and an exit and a holding period, once they have those three, after all, that's it, right? Long, short, in, out, holding period, how long? Trailing stop, yes, no. We put in a lot of dynamics to allow people to build their own strategy. Trailing stop, what kind? Last conditional change, moving average of last conditional change, moving average of last conditional change with a function of ATR. So those are the three stop methods that we built in the system. LCC is just the simple last conditional change. That was my concept that we wrote in a book 15, 20 years ago. No, 2004. So it's not exactly 20 years ago, but we're getting up there. 18 years ago. I can't believe that came out. And here we are 18 years later talking about the same stuff. Last conditional change. The next one is last conditional change. And if I go up to studies and we're going to edit studies, and I'm going to turn on the bullish last conditional change. It's off. So I hit status. I'm going to hit close. These pink lines are my last conditional change. So if the market gives a sell signal, if you develop a signal that says generate a short if the market closes below last conditional change, perfect. If you say I'm short and get me out, I don't have the bearish LCCs. But if you look up here, you'll notice, oh, what a coincidence. That gray line matches almost that pink line. And if you'll notice, these other little teeny weeny little moves have new last conditional changes, right? And then so there's the last conditional change modified. We take a moving average component of the last conditional change. That's what's given us the gray lines, which is called the dynamic on your models on the Algo 17. So instead of saying, gee, you know what, I was finding on a 5-minute model or shorter term time frames, there's a lot of times we get stopped out. Last conditional change works. It's great. But a lot of times you get a small range last conditional change and the market pops down and takes off, and then you got stopped out with the last conditional change. So why not use a moving average? And that, my friends, is what the dynamic is. It built in a moving average component, so your stop's not too far away, but yet not too close. But once the market starts over time and price to generate further away from your entry, it was like this dynamic is too far and the last conditional change is too close. And that's where we came up with the concept of, hey, let's integrate the ATR and don't even turn ATR on until, well, it optimized out at whatever the number is. So we came up with the idea of using a technical function of ATR using the last conditional change. And that's how we have that. So Ramon, if you want, send us an email. We'll try to see what we can do on a team viewer for you. I'm not sure. It's probably something simple because it either works or there's something else behind the scenes because it has to work. So if you're looking to connect the dots, we'll get that. We'll straighten that out. Okay. So yeah, absolutely. But generally speaking, I mean, if you want to know everything, what your signal is, why did it get out? That's called labeling your entries and your exits. I just shared where to find that. If you want the lines of, hey, where's my risk? Where's my reward? Where's my trailing stop functions? It helps you with better comprehension. That way you know what's going on. And that's where you find that. So again, today, just as a quick summary, should you be copying a window under certain guidelines? Yes. When should you do it? Not during the trading hours, unless you're not trading. Unless you're saying, I'm going to develop Monday through Friday next week to build and work on a strategy. I'm starting from scratch. I don't have anything. I need to optimize. I need to back test. I need to do some rigorous testing. Do I do some walk forward? Do I do some random time sampling? And so therefore, you'll find out what a little bit better slice of the pie your strategy does. Okay? Well, that does conclude our time today for several reasons. Our integrity of the recording needs to be cut off so that it can be available, and we'll get that out. If I didn't ask your question, by all means, we are here once a month as a courtesy, as customer service for people to ask questions. And as you could see when you typed them in, I tried to get to those questions as they were being asked. And as well, for the next session, if you send the questions in and you've got something down, and let's say, for example, this week you got a question and you say, geez, I'd love to ask John that question. Next month, we'll have another one. Can't wait a month? Send an email. But in the meantime, if you write down your questions and you send them in before the PUG meeting, we have a sheet of paper. Generally, we print those all out, and we get to those questions that people have taken the time to send in those questions, and we'll answer those questions in the order received for the next PUG meeting. So that's the thing. We try to do a customer support basis and go through certain things on every meeting. They're all recorded, and then by topic as well, you can go back and review. I thank you very much for your time joining. I hope things are well for us all in 2022. And with that said, I'll see you at the next meeting. If not, tomorrow morning in the live trading room. Thank you all very much for joining us.